Are you ready to discover the hidden strategy that the big players use to dominate the Forex market? If you want to learn how to trade like the pros, then stick around, because today, we're diving deep into the order block trading strategy.
Did you know that most retail traders unknowingly trade against the smart money? But what if I tell you that there's a way to trade alongside them? I'm talking about order blocks, and in this video I'm going to show you how to identify those order blocks, why they work, and how you can use them to find a serious edge in the market.
Order blocks are areas on a price chart where significant buy or sell orders have been placed by institutions, banks, and other large players. These zones represent the footprints of smart money, and when identified correctly, they can provide powerful signals for entry and exit points. Imagine being able to spot where the big players are planning their next move. Order blocks give you that insight, showing you where major market orders are likely to be placed.
Now let's break down how you can identify these order blocks on your own chart. In order to find the right order block, all you need to do is you need to find the trend of the market, first of all. Then you need to find the area of consolidation. After that, when the market breaks this area of consolidation to the upside, the last candle which breaks this structure to the upside will be seen as our order block. Now, why this order block will work? Because this has broken the structure of this uptrend, right? And this is how you can find a valid order block. But you need to know that a valid order block needs to have an imbalance. Okay, so now you have identified an order block, but how do you trade it? Now, once you have identified the market trend, the structure broken part, and the impulse part, which left an imbalance, then you have to wait for the market to come to your order block. Now, there are two ways with which you can take an entry on this order block. You can either take the direct entry and keep the target till here, or you can wait for a lower time frame confirmation, and by forming like this something, and you can trade same the target till here. So there are two ways with which you can trade this order block, either directly, okay, either directly or by confirming the lower time frame. Now, the which time frame to look for, we'll cover that in the next and upcoming videos. For now, you have to learn this how to trade it. There are only two ways with which you can trade. First of all, need to identify the market trend, whether it's an uptrend or downtrend. Second, area of consolidation. Third, when the market broke this area of consolidation, it left an imbalance and an order block. Now you have to wait for the market to come to your order block. Once the market come to your order block, you can either take a direct entry from here, or you can go to the lower time frame and look for this confirmation part, okay? And then you can plan a long entry here, keeping your stop loss where? Here, and your profit till here. Now, if you have watched this video till here, thank you for watching this video. I'll try to bring as many information as I can for you for free. Now, the last part is real life example. I have taught you how to look for an order block. I have taught you how to trade it, but on a drawing. Now, how to look for that same thing on a real chart. So, I'll take an example of NSD CAD. Now, if you see very clearly, NSD CAD was in uptrend. Now, how to identify uptrend, why I mark this, I have made clear video on this on true market structure is the topic, where in which you will understand how to identify whether market is an uptrend or a downtrend. For now, the market is in an uptrend. Now, if you see very clearly, this area of consolidation, market broke this area of consolidation with an impulse. Now, what we have to do is, we have to wait for the market to come this area of what? POI, which we say. Now, when the market comes to this POI, as you can see, I have marked this order block. I have waited for a clear confirmation on lower time frame. This is a 1 hour time frame. I'll go to the 5-minute time frame. But now, why I switched to the 5-minute time frame is very important to understand. Because of this large buying candle, which some people call is an engulfing candle. Now, this candle made me think that the buyers are in control. No, but I can't trade like this, no? So I have to take some confirmation. I went to the lower time frame, right? Now, what you will see in the lower time frame will blow your mind, right? And this is somewhat made me realize that I can go for the long entry. Now, what you have to do is see very clearly. This was the area of consolidation which the market was forming, right? This was the area. And after that, if you see very clearly, the market pushed to the upside. The large candle on the 1 minute time frame, right? 1 hour time frame. Okay. This is the candle which made me realize that, okay, the market is going for a bullish run. Now, all I have to do is, see, there are different ways which we'll learn in the upcoming videos how to enter, where to enter. But somewhat this was a breaker block here. This part where the market was taking resistance and it was becoming a support. You can enter along at this pin bar candle. See, initial you have to keep your stop loss. Trust me, I'll be very honest with you. You have to keep your stop loss here. Okay, for initial. What people do is, what I see is in the reels and everywhere, they put these small stop loss showing that they know very much. No. Initial, you have to keep your stop loss here at the swing low point. And the target needs to be, if you're taking that much risk, the target needs to be 1:2 at least, right? Okay, which we'll switch in to the higher time frame to see. When this was a target. Now, when you entered, see, the point is market could come here. I'm not saying that the market can't. Market could come till here also. But this was the last zone which have an imbalance. So somewhat it makes me understand that market can go from here. There's no imbalance in this move. So there's very low probability that the market can come till here. But market can go from here. There are two reasons. First of all, this candle has an imbalance. Second, it has a breaker block, or we'll say that the resistance is turning into support. Okay. Initially, starting May, you have to keep your stop loss till under the swing low point, because people are not confirmed that the market can go from here. It can also come from here also. Okay. Now, and target, we all know what we have learned. The target needs to be what? The swing high point, which was here. And what you get is, you got a trade of 1:3.5. This is what I'm saying, that the smart money can make you big profits. Okay. So the same way, right now what I have done is, I have taken a trade here. This was the area of consolidation, right? This was the area of consolidation. The market broke this area of consolidation with an imbalance, if you can see. And now the market has returned to this. Now, all I am doing is, I am taking a 1:2 trade. Now, why I am taking this trade? Very simple. I have explained you. But see, you don't know. This time it worked. This time it may not. See, this is the life of a trader. Sometimes it will work. Sometimes it will not. All you have to do is, when it is working, you have to book as much profit as you can. And when it's not working, take as low loss as you can. That is the simple explanation.